money market and bond market as well, and the Indian bond yields hit a one-month low of 7.21% from 7.28% closing on Friday, while the rupee appreciated to a one-week high of 83 rupees 27 paise. Now, all this after the USFOMC indicated it is willing to cut sooner and more next year. Latha is right here to tell us how the Indian forex and bond markets are really reacting to this and what's the sense we are getting. Latha.
Yep, today it was a bit of a Diwali in the bond market, not so much in rupee, but bond, yes, yields were down by about 7 basis points. The steeper, the bond market doesn't show much in the 10-year. It shows much more reaction in what you call the overnight index swap market. The swap market is a freer market, and there you saw a 9 basis point fall in the 1-year swap. And in the 2-year swap, it was like almost 14 basis points, almost factoring in a rate cut. The market is now pricing in an earlier rate cut. Those who were on Q2 next year were thinking of Q1 now, and those who were not even figuring a rate cut in Q2 are beginning to factor in one definitely by the July, August, September quarter of next year from the Reserve Bank, because the Fed has said that they may cut 3 times, at least that is the majority opinion in the dot plot. And of course, Powell's press conference was extremely dovish, and that's getting factored in over here as well. Interest rate differentials are important. But in the currency market, it was not such a dramatic story. The rupee began strong by about 7-8 pice, no, even more, 13 pice at one point in time in early morning trade. But very quickly the Reserve Bank came in and bought a lot of dollars from the guys who were selling it. And who were selling it? The custodial banks. The custodial banks are the ones who bank for the FIIs. They come in, sell dollars, take the rupees and buy stocks. So they were selling big time and RBI was buying big time. The comparison for other currencies clearly shows that the rupee did not rise much, rose by 0.07% after the correction. But you look at the Myanmar, the Malaysian ringgit, the Thai baht, all of them are up 0.5%, 0.8%. So clearly we have not risen as much as them. That's because the Reserve Bank is smoothening all those curves. Expectation in the market is that the Reserve Bank will continue to supply as much dollars as the market wants. And the market will want a lot because there's equity buying. There will also be bond buying ahead of the inclusion in the bond index. At least the first $15 billion will be clearly bought by the Reserve Bank because the Reserve Bank is sitting short forward dollars by about 20 billion. So to balance that, they will continue to buy and do a sell-buy swap. The expectation is appreciation in the rupee may come if dollars continue to pour after that. So probably around March, you could see an appreciation. That's the market's calculation at this point in time.
Latha, thanks for taking us through all of that action. A lot playing out in the money markets as well on the back of what we did hear from the Fed. With that, it is time for a short break. But when we come back, we're going to look at a whole host of stocks which are buzzing around in trade. We'll bring you the news flow in just a bit.